You probably work with a real estate coach to help you increase your commissions and make more money. As a tax coach, my job is to help you keep it. I hear all kinds of reasons for not filing a tax return. I hate taxes. I don't like numbers. I just don't have the time right now. You don't know how busy I am. Gee, my record keeping is awful. I don't really want the IRS to know my business. I don't trust the system. Wah, wah, wah. You may not be comfortable with business or numbers or taxes, but in order to work with your clients better and to serve them as a real estate agent, you're going to be able to do it with a much clearer mind and a much clearer heart, with peace of mind, knowing that you've got your taxes and your accounting matters handled with the IRS. Hi, I'm Jim Flouse, enrolled agent and tax coach. I'm enrolled by the IRS to practice in all 50 states. In this video, I'm going to share with you what you may find are surprising answers to income tax questions that real estate agents ask me across the country. Agents ask me, what can I expect to pay in taxes on my real estate commissions? What do you think your tax bracket is? In other words, what percentage of your income are you going to expect to pay in income taxes? So how much you pay in taxes ultimately comes down to factors both inside your real estate business and outside your real estate business. Most agents, over 80% of you, actually file your business taxes as part of your Form 1040 individual income tax return. Now, it sounded like I just contradicted myself, but the fact is, you mostly file your real estate agent income taxes on a Schedule C that's part of your Form 1040 income tax return. As a result, the percentage that you pay in taxes can easily be determined by some factors that have nothing to do with your real estate business. For example, you might be a single parent with 2 children. You'd file as what's called head of household. You'd have 2 dependents. That's 3 exemptions. Now, you may earn the same amount of gross commissions as the agent in the office next to you, but that agent may be filing as a married taxpayer with no children. Your tax rates are going to be completely different because your number of exemptions are different. Your deductions are different, and these all have nothing to do with your real estate business. Of course, what happens inside your business also determines your tax rate. Clearly, your gross commission and the amount of expenses that you can deduct are going to impact that amount. But let's give you some numbers so that you see exactly what I mean. Let's say that your net income after your expenses in your real estate business is $70,000. 15% would be a reasonable rate, and 15% of $70,000 is $10,000. So that would be ultimately your income tax. But the story doesn't end there. As an agent, you're subject to 2 taxes. No one's withholding from your checks. No one's withholding Medicare or Social Security. So ultimately, you're also going to have to pay Medicare and Social Security taxes on your real estate income. And by the way, that's another 15%. So that's another $10,000. Unfortunately, that's not the end of the story. If you live in a state that has state income taxes, you'll pay on average another 5% in state income taxes on top of the 15% income tax and the additional 15% for Medicare and Social Security, or otherwise known as self-employment tax. So you add that all up, that's 35 cents on every dollar you're paying in taxes. And now you understand why we say that taxes are the single biggest business expense for most real estate agents. Is there a way I can structure my business, perhaps as an LLC, or can I incorporate, and how will that help me to minimize taxes? Now look, I'm not an attorney, but I am an accountant, and I can directly answer that question as it relates to your tax liability. I'm not going to go through all the legalities of various entity structures, but I can share with you how an S Corp structure can save you big time on taxes. You maybe remember in my answer to question 1, I talked about how you're ultimately going to have to pay 15% in self-employment tax. Well, what if you weren't self-employed? What if you were an employee? What if you set up an S Corp in the name of, well, whatever? Maybe your name is John Smith. You set up an S Corp, John Smith Sells Homes Incorporated. You then make yourself, John Smith, an employee of your corporation. The corporation and you individually are 2 separate legal persons. So now, from a legal standpoint, you're an employee of a corporation. The corporation must pay you a salary that is in line with IRS reasonable compensation rules. But in the real estate world, the way that typically works is this. Let's say again that your income after expenses was $70,000. Set up a reasonable compensation based on what agents in your neighborhood, what your city typically earn after so many years in the business. I'll give you an example. Let's say that the average agent in your area after 3 years or 5 years of doing business earned $35,000 in commissions. Well, then it's reasonable for your corporation to pay you $35,000 as a salary. So here you are with $70,000 of net income to your corporation. Your corporation pays you $35,000 as a salary based on reasonable compensation. What happens to the other $35,000? Well, that's the net profit in your business. Will you pay taxes on that? Well, yes, you will pay Medicare and Social Security on the payroll taxes on the $35,000 of salary, but you won't pay it on the net income after your salary. What I've just shared with you is a way to save 15% of $35,000. You do the math, but it's several $1,000s, almost $5,000. So that one move, executed properly and in compliance with IRS rules on reasonable compensation, can save you several $1,000s every year in taxes. If you're not an S Corp, you may be an LLC already. Did you know that an LLC can choose to file as an S Corp? Then as the LLC, you can pay yourself a salary just as if you were an S Corp and take advantage of some of these same legal strategies to reduce your income taxes. The next question that people ask is, should I be paying quarterly estimated taxes? And what are they and how do I do it? Well, quarterly estimated taxes are basically what you need to do if no one is withholding taxes from your checks. And let's face it, if you're in real estate, in most cases you're getting paid on a 1099. Your broker is issuing you checks. They're not withholding any federal withholding, state withholding, or Medicare or Social Security. So if they're not withholding the money and sending it on to the IRS, then ultimately you, the self-employed real estate agent, are the one who's responsible for doing it. Now, what some agents do is just wait till April and have a big check that they have to cut to the IRS in the spring. That's not the way that the rules are. Unfortunately, the IRS is what we call a pay-as-you-go system, meaning they expect you to be paying taxes quarterly. So that's why we call it quarterly estimated taxes. And I want to underscore the word estimated because, frankly, do you know how much money you're going to make this year? No, it's early in the year. You can't project exactly what you're going to make, but you still need to make some kind of estimate. So you have to send in an amount to the IRS 4 times a year based on what you estimate ultimately your income tax is going to be. I would suggest you connect with an accountant who can help you to make the calculation and help you to get the payments in. How do you make those payments? Well, you can send them in by mail. If you just Google quarterly estimated income tax payments, some forms will come up which you can print and sign and mail in. Or you can pay them online. Just go to irs.gov, actually type into the search box direct pay, and there will be a way you can pay taxes online and designate a payment as a quarterly estimated payment. These are due in 4 different months during the year: April 15th, June 15th, September 15th, and January 15th. So the deadlines aren't quite every 3 months. It's a little bit of a wonky system time-wise, but those are the quarterly estimated payment dates. If you don't make those payments, you can expect to be penalized when you file your tax return by at least a few $100s. Question number 4 is, what if I don't have the money to pay the taxes that I'm going to owe on April 15th? Can I file the extension, or should I just not file at all? Well, number 1, yes, you can file an extension. The IRS will give you an automatic extension to file 6 months. So that extends your deadline to file until October 15th. Here's the problem. An extension to file does not give you an extension to pay. And so the IRS is expecting the money that you owe in taxes to be paid April 15th. Whether you file the return in October doesn't really matter. They think you still are going to owe them the money April 15th, and they will charge you a penalty. So does that mean you should just not file? That way the IRS doesn't know that you owe, and that way you won't get in trouble? Well, that's a problem too. Did you know that not filing a return is actually more of a detriment than not paying? You could owe the IRS thousands. It's a civil penalty. You could also not file your return. Well, that's a criminal penalty. I mean, technically, that could get you thrown in jail. It's a bigger offense to not file than it is to not pay. So for goodness sakes, file your return whether you have the money to pay or not. Look, you can always make a payment arrangement with the IRS. Get your taxes filed. Here's what a lot of agents do, and unfortunately, it gets them into trouble. I hear all kinds of reasons for not filing a tax return. I hate taxes. I don't like numbers. I just don't have the time right now. You don't know how busy I am. Gee, my record keeping is awful. I don't really want the IRS to know my business. I don't trust the system. Wah, wah, wah. Look, just get your return filed. You'll feel a lot better about yourself. You'll do business a lot more professionally. You'll feel better when you're with clients knowing that you've got your taxes taken care of, that at least you've got your return filed, that you've made some responsible arrangements with the IRS to maybe make monthly payments, or set up an offer in compromise with the IRS. I'm Jim Flouse, rhymes with house. If you sell houses, don't make the mistakes that most real estate agents make that cost them thousands of dollars in taxes they shouldn't have to be paying. Download my free cheat sheet, the 10 ultimate tax hacks that real estate agents use to keep more money in their pocket and share less with the IRS. You can download that by clicking the link below this video. Also, if you would, please subscribe to our YouTube channel so that you can get updates on our tax tips and other tax news. I really appreciate you taking the time to watch this video. If we can help in any way, please reach out to us. Thanks again, and we'll see you next time.